Hello, everyone, and welcome to our discussion on AI and behavioral science in banking, new approaches to cultural supervision. My name is Erich Hoefer. I am a co-founder and the COO of Starling Trust Sciences. Starling is a professional services firm offering AI-enabled advisory and technology tools for the governance and supervision of culture and conduct risk. We also host a peer-driven knowledge exchange platform called Starling Insights. And our annual publication, the Starling Compendium, is a go-to reference on global trends in culture and conduct risk. In addition to documenting new developments in culture supervision globally, we've been pleased to have joined by over 170 contributing authors from leading regulators, industry, scholars, and more. I'm joined today by Mirea Raaijmakers. Mirea is an independent advisor on culture transformation and behaviour risk. She is a core teacher at the VU School of Business and Economics at Amsterdam and an expert partner at Axiolent. Prior to that, she was managing director and global head of behavioral risk management at ING. And most relevant to today's discussion, she previously led the Dutch Central Bank's supervision program for behavior and culture. We're grateful to SuperTech Week for inviting us to join you for this discussion. But before we dive into the topic at hand, I thought it'd be helpful to start with a little bit of background. Following the global financial crisis, regulators and supervisors responded with a series of reforms that prioritized capital buffers, liquidity requirements, and resolution planning. Much of this now is embedded in the industry. Non-financial risks, of course, also receive lots of attention, but much of this is focused on external operational risks such as AML and other financial crimes, and increasingly cyber risk and resilience. Other non-financial risks, particularly those motivated by culture and behavioral risk factors, have not received quite as much attention. In large part, this has reflected a general lack of consensus as to what culture means, and agreement on how culture should be assessed in a supervisory context. With that said, a number of leading supervisory bodies, among them the Dutch National Bank, which we will get to here in a moment, have pressed forward on developing practices around culture supervision. We have documented this trend for nearly 8 years in our annual compendium report. And to name some recent examples, the ECB just recently published a draft guide on culture and governance, which went into some detail on the idea of culture risk. And in Canada, the Office of the Superintendent of Financial Institutions published new guidelines on culture risk. And recently, also this past year, the BCBS published their supervisory guidelines that mentioned culture prominently for the first time. There are many other initiatives going on around the world, and so too many to document here. But at the same time that we see this increased regulatory interest, we have seen the rapid development of AI and machine learning solutions, which means that financial institutions and supervisors alike have new access to capabilities for assessing and managing culture and behavioral risk. So now that I've kind of run through the groundwork, why don't we jump in? As I mentioned, the Dutch National Bank has been one of the pioneers in supervision of culture, and we are fortunate to have Mirea here, who was a key architect of that effort. Mirea, can you go ahead and start us off with providing some background into what motivated the Dutch National Bank to prioritize and develop a practice around culture supervision, and what were you able to accomplish?
Thanks, Erich. Of course. Well, this type of supervision started off just after the great financial crisis, and I think amongst other supervisors and regulators, the Dutch Central Bank realized that it's not just, the organizational structures or the balance sheet that will give you information on where an organization stands, how healthy it is, and if it's a risk to the system, so to speak. But they became very aware of the fact that the behavior of key decision makers in the organization, at the executive level, at the supervisory level. In the Netherlands, we have a 2-tier board system. The behavior, the decisions they make, the way they lead the company, the way they communicate and build trust in their organization, build trust towards their stakeholders, all these type of behaviors and also company culture, they drive performance and integrity as well, right? Next to the balance sheet, next to the organizational structures. And impacting that behavior, that was another, I think, important insight and lesson learned from the great financial crisis is you can't impact organizations trying to change what the financial industry does just by simply adding rules to the rules that you already have, right? So they were, I think, seeking to find other ways to understand what is going on in the financial institutions, understand what drives performance and integrity, but also seeking other ways to have impact. And to, whenever you are worried or concerned, to find other ways to influence banks and insurance companies and pension funds. So, and I think the Dutch Central Bank, has made a very bold decision by saying, okay, if we want to understand better human behavior and company culture, we also need to bring in people with a particular expertise in those areas, right? And it's something that we don't have the capability now with the accountants and the economists and the legal people with a legal background and who were highly educated. We need a different kind of set of capabilities in our organization. And so that was the big onset, so to speak, right?
Yeah.
And then the challenges, of course, build a supervisory approach, build a regulatory approach that, has the proper supervisory elements in it, but, is also able, of course, to identify company culture, to identify key elements of behavior in that culture, assess, of course, what the risk is, and then drive mitigation of those risks, of course, of what you see. And I would say accomplishments, we've done a lot. But I think a couple of the main accomplishments is that, first of all, that, we were able to create a common understanding, and I would say a toolbox for supervisors to be able to start identifying, what are risks in terms of behavior, what type of decision making, when is it unbalanced, right? What does it look like if the decision making in the boardroom is unbalanced, if the commercial interests are driving and taking over, right? And regulatory interests or interests of other stakeholders are not being taken into account. And what does leadership look like if it's pushing the organization too hard, and it's pushing the organizations towards taking a certain merger and acquisition decisions that are not realistic, and that push the organization towards a financially very riskful area. And being able to understand that and creating a common understanding, creating a common language, creating a supervisory toolbox also to identify those type of issues and be able to assess those type of issues and take them into account right next to the supervisory perspective on the organizational structures, on the governance, on the balance sheet, but also taking these kind of being able to take these behavioral issues into account makes the supervisory position much more solid and robust. And I think that's a huge accomplishment, right? To have built a common understanding, common indicators, and being able to actually identify and do something about the issues that you see.
Yeah, no, that's really helpful to go to overview. And it strikes me from some of the experience we see, there's often in management in bank management, but also I think in the supervisory space, which you know much better. There can be a tendency to look at systems and processes and focus on those because they're tangible. You can test them and see how they work, but there's also some risk in just in putting your faith in those systems and processes without understanding these behavioral factors, right?
Yeah.
Yeah, I mean, do you have like how would if we're looking at those kinds of if you're looking from a process, if you're trying to analyze processes from a supervisor, how would you apply some of these tools to kind of bring in those people elements? Like, what's your perspective on that?
Well, I think on there's different phases, I would say, in your risk management cycle, right? To put it more general, because I think for every regulator supervisor, you have a risk management cycle that you're following, right? Which the first phase is you want to identify, you want to understand, what are the areas in the industry I'm overseeing, or zooming in on one organization. In this organization, what are the areas that I need to focus more of my attention and my resources on, right? So you want to have some kind of heat map or overview of hotspots in the area you're overseeing. And so that's one of the first things that we did, which I think is important and think about, right? Zoom in on indicators that will tell you something about behavior. And right, I think in lately in research, this is called unobtrusive indicators, right? There are ways to get information around culture from more on the outside that can give you some kind of information of what's going on without having to go to the organization and be very intrusive. Yeah. So that gives you I would say, kind of a heat map or a bank-wide view. But then if you know the areas, right, the hot spots, it's incredibly important to go in a little bit deeper and find out what's going on. And here's the thing that I think, the majority of regulators and supervisors are comfortable and are, will go out to institutions and gather information, right? Gather information on policies, on controls, on do maybe some testing, or ask, institutions to do the testing of those controls and find out how things are operating. But the thing is, you can have, a perfect process on paper, right? And in terms of design, but how it operates is depending on how the people in that process, of course, how they act, how they interact with each other, right? If the majority of the processes in financial institutions, for example, go throughout the organization horizontally, right?
Yep.
And a lot of different functions are involved. And we know that all these functions have to interact with each other. They have to transfer and hand over information in order to move on in that certain process. Now, handing over that information, you can do it in automated processes, but there's, with complicated information, this is usually something that is being done by people. Yeah. And if people have to hand over and transfer information, well, that's an important moment to zoom in on and understand, how is it that, how are people doing this? How are they sharing this information? So and that is something that you can get out of a system or a management reporting. You can see, if there is information, if there are policies, if there is guidance, but how people use that and how people share that information. You have to find out differently, and you have to look at it with a behavioral perspective and because you want to know, for example, what are the trust levels, right? Because we know if the trust levels are low, people will share less information with each other.
Yes.
And it's one of the things that we've come across, right, in the assessments that we've done, that, you know, the trust levels between, in banks where you have the different lines of defense, but the trust levels between those different lines of defense, they can be very low, and they hamper information sharing, crucial information sharing, right? Which in the end, at the end of the decision-making process, you will get much lower quality in terms of the decision-making, right? And I'm talking about the high-risk, complex decisions people have to make. There's a lot of decision-making that can be automated, but we're talking about the high-risk decisions.
Yeah.
And
No.
yeah.
Yeah, no, and a lot of that, I think a lot of companies are trying to capture that through things like surveys.
Yeah.
You mentioned sitting in, observing board meetings or sitting in on other meetings, and you can kind of pick up some of this, but a lot of this happens continuously. It happens in all corners of the organization, especially in a three lines of defense kind of a framework. And so, just seeing that you have a three lines of defense on paper, and a GRC system behind that documents, the status of different risks at different points of time, doesn't really give you a good picture of what's actually going on behind the scenes. And that's but the tools we've had available to us to look at this kind of behavior and culture, it sounds like there's a lot of legwork, right? It's a lot of requiring people, supervisors or managers or control officers, what have you, having to move around the organization and almost directly observe this.
Yeah, I think, well, if you look at the focus that we had at the Dutch Central Bank, the focus was on the executive level, so the executive committee and the board committees. And yes, we were able to capture those groups, I would say, right, and interview all of them, interview a couple of direct reports, do observations, behavioral observations, and see how they act and respond. But the thing is, right, if you want to scale this kind of approach to a larger group in the organization, then it's harder to do that like that, right? I still think, in any approach around understanding culture, I always say you want to have, you want to have numbers and you want to have stories, right? So you want to have metrics, more quantitative data, and you want to have more qualitative data. But nowadays, with all the developments in terms of technology, gives you great opportunities to gather real-time data, quantitative data, but also qualitative data. And but in terms of being able to scale, your risk identification in an organization, but also across an industry, it's an incredible, interesting time because there's so much more opportunities to use technology to get information. And then I have to say, it's not just any technology. It's important to have technology that is driven by behavioral science, because I think this is a really key insight from what I've done at the Dutch Central Bank, but also after that at ING. You need to bring in the behavioral science and apply that to your technology, but also your approaches, but especially also the technology, right? To make sure that you get good data on the behaviors in your organization.
Yeah, no, and I think, in our minds, that's a real distinction between sort of looking at these technologies, and this is a great segue, by the way, into the new tools that are available. But what you're describing is kind of the key difference from what we would describe in the past has been surveillance, which is just keep an eye on people, try to monitor their keystrokes, see what they're saying, and then use that as some means of judgment. But that's a very crude and backward way of looking at culture and behavior risk, in our view. And I think I see your head nodding, so I think we
Agree.
agree on that.
Yeah.
You really have to understand the behavior. You have to understand some of the network dynamics, because behavior is contagious. It's been shown over and over again in research, and people adopt the norms of those around them, the people who they respect. And you mentioned trust earlier, which is a key word in this. They look to the people who they trust in the organization as to how work is done, how these processes are actually followed, whether they're followed at all, or whether they're really meant to be ignored because people are just too busy and they can never get all their work done. So this process over here can be ignored, but this one must be done because management will come complain about it. And so really what we want to do is look for behavior and culture from that lens, rather than just going back to almost more systems-based approach of just trying to catch people who have done something wrong.
No, I fully understand. So I think you want to zoom in on certain key behaviors, right? So I think if we talk about culture, the most tangible part of culture is how people behave. And it's what they do, it's what they say. These are things that you can grasp, right? Especially if you're using technology. And but then understanding why people behave, you want to have insight on the drivers of that behavior. So why is it that people behave in a certain manner? And for example, trust is a very important driver. Psychological safety, as we know, is a crucial driver, right? Do people feel safe to speak up? I mean, it's an incredibly important driver in terms of performance, in terms of innovation. So there's a couple of drivers of behavior, and some are tangible. So in a sense, right, policy or incentives, target setting, those are more tangible drivers of behavior. But the thing is, we know that those tangible, more structural drivers of behavior are less impactful, right? The
Yeah.
big impactful drivers of behavior are on the social side, the intangible side. It's the social norms, it's the sense, it's the trust, it's the psychological safety, it's the beliefs that people have. And in order to, as I say, they are intangible, but it doesn't mean, but they are intangible for the the naked eye, so to speak, right? But we absolutely have ways to get a sense of them and gather them. And again, I'm repeating myself, but technology nowadays can help us tremendously in that regard, to understand, why is it that people give priority to something and do not give priority to something else, or they disregard certain information, and they overemphasize other sources of information, or they don't trust their compliance officer, but they do trust somebody else, right? And so they're not sharing the information with the compliance officer, but with others. So it's incredibly important to understand those drivers as well.
No, and that's where we've seen a lot of progress. You had mentioned before looking at sort of at a higher level at the unobtrusive data. And for those who on this call who may not be familiar with that, that's kind of a process of using language recognition software to look at things like publicly available information, things like annual reports or company statements or even employee reviews, to kind of analyze what kind of behavioral signals can be picked up from that kind of language. But as you get down, there's been a lot of advances in generative AI, but machine learning is still progressed quite a bit. And so there's been a lot of progress in just, Mirea, what you're describing is those interactions between people, a next level down, without even really understanding the language or what people are saying with one another, but to be able to see these connections between people in an organization and be able to observe those patterns and tie those to the behaviors you're looking for, this opens up a whole nother realm of opportunity without being intrusive, without trying to see what people are actually trying to say, which, frankly, can be very distracting. What you're really looking at are people embedded in the organization? Are your compliance officers embedded? Are they well integrated with the operations, with the first line? And are they effective in communicating back and forth? And these things are, AI is making this kind of data, this data that's just sitting around these organizations, they're making this data useful in that perspective to be able to see these patterns. Yeah.
No,
And then there's always a room for the, going more intrusive as you go, but that's, there's no reason to if you don't have to.
No, I think, you can get a good sense. I think again, I think it's also important to understand that you have to find effective and efficient ways to understand those drivers of behavior. And yes, there will be moments where you have to zoom in and interview people, ask them why they're doing things in a certain manner, what the stories are, that make people behave in certain manners. And therefore you will need a capability who's able to do that. But I think, it's part of having the right capabilities, right, in order to be ready to make sure that your supervisory approach is aligned with nowadays what's important, right? If we think about innovation, if we think about growth, if we think about ESG, if we think about cyber risk, if we think about AI, all those topics that are so incredibly important, right? And with the geopolitical situation, being resilient also and able to deal with everything that changes so quickly nowadays. I think for supervisors, having a capability that's also able to zoom in on culture and behavior should be part of all the other capabilities that we find more that are maybe more common, but you need a portfolio of capabilities to be able, I would say, to keep up with everything that's going on.
Yeah, no, couldn't agree more. I see that we're kind of approaching the end of our time, and so if there are any questions, please put them into the chat. But for supervisors who are looking, who may not have a robust culture program today or behavioral science program today, program of action, what are some of the things that, and much less, moving into technology and using technology tools, do you have some advice from your perspective as to what's the best way for them to get started and to start to go down this path? And what are maybe some of the advantages of starting now versus, where you were facing back when you were starting to do this back at the Dutch Central Bank?
Well, I think, if you want to, I think it's important, right, to think about culture and think about, what are some key, and take 3, right? Don't or take 1. But what is key behavior that is crucial for you to see, right? And take something like sound decision making, or lead by example, or effective collaboration throughout the organization. Those are a couple of, I would say, key behaviors. And then start seeing, what is the data? What kind of data do I already have? What kind of metrics, but maybe also other sorts of data do I have that give me an indication of where the organization or the industry is in this regard? And then think about, what kind of additional information or data should be very helpful for me to understand. And I would say start building from there, right? And don't make it too big, right? But start with a couple of key behaviors that are just crucial in order to drive performance, drive integrity, drive innovation.
Yes. Well, that's great. Thank you so much for joining. This has been fun. I could talk about this all day, but I know we got a lot of other interesting topics to discuss at SupTech Week. On behalf of Mirea and I, thank you SupTech Week. Thank you Cambridge SupTech Lab for putting on this great program. And so if looking forward to seeing the rest of the program.
Thanks.